Hello, everyone. Today on the final bar, we will break down this market continuing to push to the upside. Choppy finish to the week on Friday. Today, here on April 4th, we move a little further to the upside. The S&P closing just about 45.80, but really it was about growth over value today. However, that's against some of the longer-term trends we've seen, certainly year to date, with value sectors in general outpacing growth. What's next as we look at these major stocks and sectors? Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a windy Redmond, Washington. Thanks for joining us every weekday after the close as we focus on the market environment using the power of StockCharts, using data visualization techniques, the technical analysis toolkit to better try to understand these markets. These are volatile times, and we talk about elevated uncertainty. Even though the VIX has gotten back down below 20, in terms of any sort of uncertainty gauge, I think it's probably at an all-time high right now. We have a lot of competing narratives, a lot of things that are either have happened or are expected to happen with potential for market moving impact. And so I find in times like this, charts can be such a great way of cutting through all of those competing narratives and just focus on the evidence of the markets themselves, right? What are the markets doing? What's working? What isn't working? What's leading? What's lagging? What's breaking out? What's breaking down? What's in the middle? Those questions, if you keep answering them consistently enough, you'll generally be on the right side of things and you'll be avoiding things that are underperforming. We have a lot of charts to look at today as we hit the market from three directions as part of our normal Monday routine. We also have great guests coming up through the remainder of this week. Tomorrow, we have author of The Life Cycle Trade, Kathy Donnelly, joining us. That's tomorrow on Tuesday the 5th. On Wednesday the 6th, Mike Siccardi, who's one of our writers for the Top Advisors Corner on StockCharts.com. On Thursday the 7th, we'll talk equity derivatives. We'll talk options with Bob Lang, the founder of president of Explosive Options. Always does a great job of highlighting a particular option strategy and how to incorporate it into your thinking. A lot of great special content coming up for you as well. Go to StockChartsTV.com, by the way, to check out all of our previous special events and market discussions. Let's continue on today's show. Monday is kind of a fun one because we hit the market from three directions. We'll talk big picture, then we'll talk sectors, we'll talk individual stocks. So let's get to our top-down macro portion, our market recap. The S&P up 0.8% today, finishing the day just above 45.80. The Dow, by the way, which we rarely talk about because honestly, as a measure of broad performance, it's pretty weak. However, big round numbers tend to get attention, and so just teasing 35,000. The NASDAQ composite, by the way, doubling the upside return of the NASDAQ and more, up almost 2% today. The NASDAQ is back above, NASDAQ composite, by the way, back above 14,500 here today. Mid caps and small caps actually both down. So this is very much a large and mega over mid and small. And you can see that the VIX, as I mentioned in the introduction, down below 20, currently around 1850. Other asset classes very quickly. I wanted to point out that interest rates actually broadly moved higher, particularly the longer end of the curve. So 5, 10s, 30s, all increasing. The 10-year yield above 240 spiked higher earlier in the day, but kind of settled in there. Had come off quite a bit on Friday. So sort of returning and potentially continuing this upward trend in rates that we've seen. This is a great reminder on a day like today. Growth certainly over value. The three top sectors were the growthy ones, the FANG sectors. Everything else was flat to down, even though interest rates were higher. So this is why I always talk about people love to have a very simplistic relationship. Interest rates are going up, which means growth stocks should be underperforming. It's not that direct of a relationship. I wish it was that easy to just be able to figure out one asset class or one indicator and everything else kind of lined up. It doesn't, because the markets are a complex system and it's never just one variable and two things that you're comparing, or two variables in this example. the markets are complex and there are a lot of different narratives and variables, a lot of different participants with different motivations. So growth stocks can go up on a day when interest rates are higher. It's more about the longer term trends that we're talking about when we talk about those potential relationships. In the commodity space, sort of a mixed message from precious metals, with silver down today. Gold prices higher. The GLD was up about 0.5%. Broadly speaking, the commodity complex was higher, with energy stocks, with energy prices up a little bit more. The USO was up almost 4%. The energy sector actually flat today, with the XLE right at the zero line. Choppiness over the weekend in cryptocurrencies, Bitcoin, Ethereum, we've highlighted those recently, really emerging from a basing pattern, a consolidation phase, and rotating higher, but stalling a bit here, coming off a bit today. Bitcoin just currently right below 46,000. And Ether just below 3,500. We crossed above some pretty significant levels not too long ago. So these are coming off of some pretty nice runs in the short term. And I would argue a renewed upside strength for both of those areas. Let's look at a chart of the S&P 500 next. If you watched our show on Friday, and if not, I would certainly encourage you to check that out. That Wrap the Week show that we do on Fridays is a lot of fun and has a lot of great information using the Mindful Investor Live chart list. If you go back to Friday's show, by the way, you'll see that the market trend model that I follow turned positive, now positive on all time frames, short-term, medium-term, long-term. So market trend model saying thumbs up across the board. Of course, in times like this, I tend to argue with the market trend model. I argue with the rules-based part of my process because I feel something differently. I feel things being overextended. I feel things having run and this downtrend not necessarily having run its course, but the charts are telling me recovery is just fine and stocks are making new swing highs. The S&P, by the way, pushing back higher today, as I mentioned, right around that 4,600 level. And I think that's a key point. That's that gray shaded area on the chart here. On my daily S&P chart, it's basically been a process of one by one negating these bearish signals, right? The market's lower in a downtrend. As long as we remain below trendline resistance, we broke it. It's bearish as long as we remain below the March lows. We broke right through those. As long as we remain below the 200-day, we've done that as well. The last level, until we clear the way to all-time highs, I would argue, is getting above 4,600. And we tried that last week. That was on Tuesday session, I want to say, when we closed higher above 4,600. The immediate next day, instead of getting a follow-through to the upside, we rotated back downward. Arthur Hill, on his most recent show, by the way, talked about that concept of follow-through. And we've talked about that a lot on our show as well. Might give you another second opinion on the whole idea of follow-through and why it's important to wait for some sort of validation after a breakout. But I think the chart of the S&P is showing you why that's so important. Rally, Friday was a bit of a higher close after Thursday's drop. Today we're pushing higher, closing around 45.80. My real question: can we get above 4,600 and have a confirmation, meaning at least a little further move in due north? And if that happens, I think that quickly opens the door to S&P 4,800. If not even a little further, we have to see where things would end up from there. We're going to get back to our dashboard and talk about sector returns and talk about some individual names. So I just wanted to go through the remainder of this recap session, talking about some major indexes, and then we'll talk about some other asset classes as well, just with a few moments that we have here. The NASDAQ 100, we talk about the Qs a lot, but I just want to bring up the NDX. If you look at the chart of the NDX, by the way, it's just at its 200-day moving average today. It broke above 15,000. It closed above it again today. This after doing so mid last week and then dropping back below it. So we are literally right at the February high. We are right at the 200-day moving average. So it is completely reasonable for the NASDAQ 100 to rally off of support at 13,000, which has served as support a number of times before, rallied up into a significant resistance level. It's right at the February highs, right at the 200-day. Is there enough gas left in this tank to push us beyond and push us up there? This is why I'm not all clear, raging bullish sort of sentiment, because a lot of these things have now rallied into significant resistance. NASDAQ 100 isn't above its 200-day moving average yet. I'd like to see that before I feel really good about the upside potential for the markets as a whole. Now, if you look at a larger index, so if you look at the S&P or look at the Russell 1000 ETF, by the way, you can see it's a little different in that it's broken above the 200-day already, but also sort of still trying to get above those February highs. And that's sort of a consistent theme with a lot of the charts I'm looking at. Things have had a nice rally back to resistance. not quite enough in a lot of circumstances to really propel above resistance. And that's something to pay attention to. Also, in terms of the breadth indicators, right? We talked on Friday about the cumulative advanced decline lines, not quite getting above new swing highs or new highs yet, but showing certainly some renewed strength in the short term. I wanted to bring up the Nasdaq Composite, which I'm just missing here. Here it is, right at the top. So this is an important chart to watch, right? So we've talked about that 14,000. It's about 14,200 level, right? That was resistance from early 2021, became support a number of times in later 2021. We've now broke above 14,000 a couple months ago, and now we're hitting this last resistance. So again, we're sort of rallying into the previous highs, and we have not gotten above the 200-day moving average. That happens, and I think people that have been holding out on being bullish potentially start to jump in and talk about the upside potential in stocks more broadly speaking. Just to finish off here, we talked a little bit about cryptocurrencies last week as well. Bitcoin with a nice rally, Ether as well, and both of them obviously had come off from highs in November of last year. Similar to when the equity markets topped out, I think by most definitions, cryptocurrencies came off as well. Bitcoin lost about 50% of its value during that time. From there, rotating higher, and you can see this nice consolidation pattern, and not breaking above 44, 45,000 is a nice rally. Now it's sort of testing that area from above, and I think seeing that hold would sort of complete that bullish rotation, really getting above the 200-day moving average, getting above the first Fibonacci resistance level. It's kind of right where we're at. So just like a lot of equity indexes rallying into resistance, same thing with cryptocurrencies. Nice run, and I think overall the path of least resistance most likely higher. But you really would like to see some follow through beyond that resistance, sort of that confirmation that there's further upside to be had there. Let's go on to our next segment, sector setups. What we'll do is now look at the 11 S&P sectors, talk about their configuration. We start with the RRG, which is the relative rotation graph. Julius de Kempener designed this many years ago. You can check out his show, Sector Spotlight, if you want to learn more about this really a beautiful, simplistic way of visualizing the 11 S&P sectors rotating around the benchmark, which is right there in the crosshairs. Up and to the right is bullish in the leading quadrant, is ideal, sort of in this area and heading northeast. Very few sectors in that configuration. It's really more of a rotational environment at the moment. Energy has been the strongest, and you can tell by the fact that it's furthest to the right, but it's also heading straight down, right? So the momentum, even though it's still outperforming, the momentum is coming off of that long-term outperformance. Two sectors, consumer staples and financials in the last week, have now rotated from the leading quadrant into the weakening quadrant. So these are sectors that had been emerging in a position of relative strength, now rotating lower. What's really strengthening at this point? Not much, but I would say utilities, healthcare probably, and materials would be the three. Maybe real estate, which is now back into the leading quadrant as well. Here's the growthy stuff, which has all been in the lagging quadrant until this week. Communication services just improving a little bit, and tech and consumer discretionary all to the left side of the zero line, but improving, right, heading north. So this rotation here is basically showing you it's still value over growth, but the momentum is coming out of that value trade and coming back into the growth trade. And that's certainly what the last couple weeks have felt like, with renewed strength in some of the more growthy areas of the markets. Let's now look at the 11 S&P sectors using the candle glance function. And by the way, you'll notice on some of these pages that I have, we've got the little special banner on the top. We just had a new product release last week. We've been getting a lot of great feedback on that. And if you haven't checked it out, I would make sure when you bring up your chart, go to the What's New page, or you can just go to stockcharts.com/new and you can get to this page. It'll share with you all of the different features that have just been released onto stockcharts.com. On this show, over the next 4 to 6 weeks, we'll be highlighting a couple times, maybe a week, we'll highlight some little features that have been added, because there's a lot of really good stuff. Grayson Rose's show every Friday called Stock Charts in Focus is a really good place to immerse yourself in the Stock Charts platform and become more of a power user. So he is going to be talking about a lot of those new features here in the coming weeks as well. Now, when we look at the 11 S&P sectors on the candle glance function, again, this is the idea that you're looking at all these charts at the same time and starting to find which patterns are similar, which patterns are different, what outliers do you see. I'm immediately drawn to the things that are making new highs, and it's not many of them, right? Some of these things like energy had been making new all-time highs, kind of stalling out a little bit. Now, don't get me wrong. If you look at the average energy stock like a VLO or DVN or something, they might be pulling back a little bit, but not the end of the world. I mean, these are still long, long uptrends and strong charts, and I think there's certainly potential for them to do quite well through the course of 2022. But certainly stalling out a bit while you're seeing renewed strength in things like technology, even consumer discretionary and elsewhere. But the only one of the 11 S&P sectors really making a new 12-month high in the last week, utilities, right? Boring, defensive, not juicy utilities. So it tells you a little something on Friday in particular, right? We had the nice, sort of choppy phase. Markets move higher a little bit, but it was really defensive stuff that was leading the way at times last week. And that's a bit of a concern, right? If you feel like the market is in a bullish position, if you feel strength, I would say two things that you would want to see if you're bullish. Three things, maybe. Number one is the price continues to follow through, right? You meet resistance and eclipse it and follow through. We've not quite seen that yet. You see breadth conditions improving, right? You see breadth support that, right? So today, as we'll talk about, maybe actually one of the 3 and 3 charts I'll share with you, breadth wasn't great today, sort of a 50-50 day with advancers and decliners. So it's not like everything was up today. Market was up, but it was relatively narrow leadership, which is an area of concern. Finally, leadership, right? What groups and what stocks are actually leading? I'm seeing utilities as one of the better plays over the last couple of months. Really, since November, utilities has been good on an absolute basis, but particularly on a relative basis, and that certainly would cause me to have pause a little bit on a bullish thesis if it's things like utilities and real estate that are showing strength in that sort of environment. Let's focus just a bit here on technology. We'll talk about some of the individual names within technology when we get to our next segment on individual stocks. But I think the chart of the XLK, we've kind of covered this already when you talk about the NASDAQ Composite, the NASDAQ 100, because they're all sort of looking at similar universes. But the XLK in particular, and I'm looking at this relative strength line, I'm looking at the trend line from the December peak, connecting that with the highs in February, early March, and then you see the rotation higher. This is something that's transitioning potentially here from underperformance to outperformance. Certainly in the last couple of weeks, you've seen some renewed strength. The XLK has now broken back above its 200-day moving average, testing that from above on Friday, now rotating higher a little bit. This is after breaking above both moving averages and breaking above trendline resistance on a price basis as well. So all of a sudden, you're finding some decent support here from the lows in September of last year. We traded below them and even closed below them. Didn't really get much further below those fall lows for the XLK, and now we're rotating back higher. If we keep making higher highs and higher lows, I think it's very difficult to be negative on this kind of environment. So what happens if you're long on this sort of chart here before we take a brief break? Here's what I would suggest. Number one, on any chart like this, is it having a nice run and you feel like, wow, this is the type of chart I obviously have to buy? I'm not saying that's the case, but let's just assume you feel like you're all in today. I would very quickly be looking at some sort of trend following technique to track this trend on the upside. You now have a low from mid-March, early March. You have this low from last Friday. Connect those two. You can see we're trading above that trend line. The point of trend lines for me are not necessarily that they're the most important trading tools in the world, but they give you a visual guideline to track a trend, right? This tells you what the overall pace of the trend has been over the last couple of weeks. As long as we remain above that trend line, the short-term trend is in play, and it's continuing fairly consistently. Once that trend line breaks, it's not necessarily saying you automatically need to sell or that you need to take some drastic action, but it is telling you that something's changing, that you need to be aware of it. So setting trend lines on something that's had a nice run, particularly some of these technology names and other growthy names out of the lows, I would take a trend line using the previous swing lows and see when the chart tells you that the pace may be shifting to the downside. Let's take a quick break. We'll be back with my next segment, Shifting Stocks. We'll see you in a minute.
What if you could look beyond price and identify big moves in the market before they happen? That's why we created the Moxie Indicator Minutes. Hosted by me, T.G. Watkins of Simpler Trading, the creator of the Moxie Indicator. Each week, I'll provide you details about the indicator, what it does, and how it can work for you. Only on StockCharts TV.
Hey everyone, welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. Thanks for joining us every weekday after the close as we break down these markets using technical analysis and the StockCharts toolkit. A couple quick announcements before we get to our next segment, Shifting Stocks. First off, we're going to do a mailbag segment on Tuesday's show. We love to feature one of your questions live on the air. Our email is thefinalbar@stockcharts.com. We're on Twitter @finalbarsctv. We're on YouTube. Put a comment below the video you're watching on our YouTube channel. We'll gather all those questions. Hope to answer one of yours live on the air on Tuesday's show of this week. Also, go to stockchartstv.com. That is our on-demand platform. We have such great content on there for free every trading day. Special events like the pitch, Chart Madness, our market outlook specials from January and February, all of our daily and weekly shows, all available on demand from stockchartstv.com, or on your mobile device, just search for Stock Charts TV on demand. I want to continue on today's show with our next segment called Shifting Stocks. We talk about the big picture, the overall market environment, the S&P showing renewed strength, the NASDAQ and growthy sectors certainly leading the way higher, but accelerating now into key resistance levels. So there's going to be enough juice to push us through those obstacles on the road. We talked about sectors, we talked about this today's movement with growthy sectors starting to work. Let's look at some of the individual names here in Shifting Stocks and focus on some of the trends that emerged today. So Elon Musk single-handedly managed to push the market higher, I feel like, in a lot of ways. Every headline, as I was sort of waking up and getting a coffee and checking out how things were going, because the market opens around 6:30 local time for me. I'm looking at the headlines, and it was all Musk all the time, with major stocks pushing higher. So I was not surprised to start looking at the charts and recognize a lot of bounces higher in tech names. So Twitter obviously bouncing higher, given Elon Musk's comments on having exposure, taking on a significant position in Twitter. So what do you do on a chart like this? So a couple things. I'm thinking of, I think it was Wells Wilder or Gann, I forget which legendary technical analyst or trader put in one of their books why it's really tough to trade equities. I feel like that was a Wells Wilder in his intro, but I don't really remember at this point. It might have been Gann's book on how to trade commodities, but basically said, I don't trade equities because of the equity risk, right? There's a company risk that's embedded in stocks. With commodities, certainly there's headline risk because you have information on supply and demand and all of that. But at the end of the day, it's a lot more about the push and pull of the market, sort of that natural rhythm of supply and demand from participants. With equities, you have news flow that completely changes the character of a stock like that. And people will ask, well, are charts really helpful when that happens? I would tell you there's no analytical technique that can prepare you for an immediate 27% jump, right? The 10Q did not have this one embedded in it. This is just a news risk, which is a risk for any equity investor at all times. You have to be emotionally prepared that your stock could go up or down 20+% because of some headline. That's really has nothing to do with you as a participant, or honestly, the actions of a lot of other participants. This is a sudden shift in the news. No analytics, fundamental, technical, quantitative, really can prepare you for an outlier event like this. But what it can do is show you how investors have treated this new piece of information and give you some new guidelines to work with. So now what do we do with the chart of Tesla? Twitter. Well, we jumped off the diving board here at 40. We jumped up to around 47.50, closed just around $50 a share, almost touched the 200-day moving average, but not quite there. So now we have a gap to work with, and gaps can be helpful because you have some real delineations of where to go. Sort of the best practices thinking about gaps is when you have a gap higher. If you do take a position on something like this, you look to see if, and even if you don't, you look to see if you find support within that gap. A lot of times a big move higher will find additional buyers coming in. If you trade off a little bit, people that missed that initial jump higher, then all of a sudden the price comes down a bit. The people that missed out are able to get in, and you can see things rally to new highs, which means if you fill that gap, it can be kind of a dangerous precedent. So you have natural support around 40. I'd be looking at today's low, which is around 47 as an initial level. Are we able to hold that? On the upside, you want to see if this can get above the 200-day moving average. We've now essentially rallied right up to that. Breaking down the 200-day last fall was one of the signs that the price was really deteriorating for Tesla. Now we have the potential to regain that key level of resistance. So the question is, can we get above the 52 or so before we get down and start retesting the area of that gap? I can't help looking at the chart of Twitter again. While the exact reason why the stock gapped up really isn't a technical or fundamental component, you can see on the charts this bullish momentum divergence, January, February, March, tells you things are improving, which I think sets the stage for this sort of thing to happen. But again, that's how I would think about it. Read up on gaps if you're not familiar with those, and see what sort of best practices you can incorporate into your thinking. The other Elon Musk, or one of the other of the many names that Elon Musk is involved with, Tesla. We have to talk about that. Obviously, getting above 1,000, big round number, which is really meaningful. Staying above that, I think, is key. A nice move higher again, over 5%, as we talked about at the end of last week. I think we had a question on this on Friday. I think pretty reasonable that the stock gets back to previous all-time highs around 1250. Then I think you reevaluate it. For a lot of these stocks, even like Apple, which we'll go to next, the question is, can it get above those previous highs? Apple is now in the range where it's retesting all-time highs, right around 180. Can it get above 180 and then get that follow through, right? Which means you hit resistance, which we've done. You want to see it now power through resistance and then hold it, right? You want to see if it's able to hold that level, get some sort of follow through, some sort of indication that it's not a fluke, some sort of indication that everyone's not selling right as we hit resistance. You want to make sure there's enough momentum to push things a lot higher. But I would say if Apple does get above 180, that really opens the door for at least some parts of the market to continue to do really, really well. It's hard to imagine the broader market struggling when a chart like Apple is doing so well there. Now, I have to obviously look at some of the other FANG names. This will probably take us through the end of our shifting stocks segment. Netflix, Meta, Amazon having some jumps today. Pretty much all the FANG stocks moving higher today. And again, what's interesting about these charts is you're starting to establish what could be called a higher low. I think if you are looking at these names, holding those previous swing lows is important. These charts work from here if they continue to make higher highs and higher lows. When that stops happening, when we stall out before we can make a new swing high or we undercut a previous swing low, I would not be surprised if selling comes very, very swiftly. Amazon, a little better setup than things like Meta and Netflix, are pretty beaten down coming out of low levels. Amazon has actually already regained its February level. Can it hold that? That's where we pulled back to end of last week. Now rotating higher above the 200. I think holding that level around 3250, we'll call it, is an important feature of that chart. We need to wrap the show, folks, and go to the 3 in 3. We'll talk about 3 charts in 3 minutes. Key themes to pay attention to. Chart number 1 is Apple. We talked about the FANG leadership. And again, the 3 sectors that were essentially up today were the FANG sectors: technology, consumer discretionary, communication services. Everything else was flat to down. So the market, quote unquote, if you're looking at certain sectors, was kind of a weaker market today. But looking at the growthy stuff, pretty healthy, and growth is so dominating the major benchmarks that the Nasdaq obviously up pretty significantly. The S&P as well, even though most of the non-growth sectors were struggling a little bit today. The chart of Apple is fascinating. It shows this great rotation, bouncing off of support, rotating above trendline resistance, and rotating above the moving averages, and now testing all-time highs. I think the bull case for stocks would have to involve Apple making new highs. You need big leadership names pushing onward and ever upward to consider this a bullish market environment. This is why things were certainly concerning in much of the first quarter. That appears to be alleviating a bit. Chart number 2, Meta Platforms, FB. We talked about Netflix in our shifting stock segment. A nice rotation off the lows for both of these. What concerns me is just we've now run up. We are getting above the 50-day moving average. That's great. The problem is these have had such a breakdown. Look how far we have to get just to get to that first Fibonacci resistance level. If you take the high from September when Meta topped out, and the low from just a couple weeks ago in early March, we have to get all the way up to 260, 262 to hit that first resistance level. That will take us back to that congestion area from late 2020, early 2021. That's quite a little bit above where we're at right now, but quite a bit before we would hit some major resistance. Can we keep making higher lows? I think that's the bull case there. Finally, when I talk about being skeptical, and again, you'll note from the way I approach these markets in any environment, it's with skepticism. So if the market's growing higher, I will show you some evidence that I think the markets may be going lower. The markets do manage to go lower at some point, as they had. I'll look for signs of strength. Right, we talked a lot about the strength in energy and materials as the market was going lower. We're seeing a potential rotation, but I'm not thrilled with the lack of volume, even though it's stabilized. Today, for example, only just above 50% of the New York Stock Exchange listings up today. It wasn't like everything was up. This was a relatively small group of names that were leading things higher. Can we build on that later this week? For StockCharts.com, I'm Dave Keller. Have a great night. We'll see you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.